everyone, welcome back to the channel, Yo. Do you realize some of the stocks are trading at relatively expensive price? Would you rather buy a stock worth $1,000 per stock or buy 10 stocks that cost $100 per stock? Generally, the 10 stocks with the price value of 100 each stock looks more affordable, even though the total cost will still sum up to $1,000. For most individual investors, it is more attractive to get more number of stocks so that in future, they will have the choice to sell the stock one by one when they need the cash or want to realize the gain. So yeah, good news to investors. Amazon, a leading e-commerce company, has announced to execute a 20-for-1 stock split. This is the first in the company history after its IPO since 1997. Amazon was listed with the issue price of $18. Today, after 24 years, its price has gone up to $2,500 per stock, which is around 138 times of its initial issue price. Amazon's stock price skyrocketed since the outbreak of COVID-19 in 2020, with the peak price as high as $3,600. What the stock split 20-for-1 means to the existing shareholders? Stock split is just a company's corporate action to increase the number of its outstanding shares. If you are an existing investor that owns one Amazon stock, which is worth $2,500, after the stock split, you will be having a total of 20 Amazon stocks. You are given additional 19 stocks for the one stock that you are holding. But there is a but. With lower stock price after the stock split, $2,500 divided by 20 stocks, meaning around $125 per stock now. Your Amazon stock value is still worth $2,500, but you are now having 20 stocks instead of one stock. The point is, the company's market capitalization will still remain the same before and after the split. There is no change to the company valuation. The changes are the stock price and the number of outstanding shares. Lower stock price seems more attractive to retail investors, and it offers more flexibility to existing investors by owning more number of shares. What does stock split mean to the new investors? It means a lower stock price to get a portion of the company. And this is of course in line with the company plan to boost its liquidity by attracting more investors to buy its stock. As a blue chip company, news of stock split is a bullish signal and viewed as a positive news that the company is looking for growth. Usually, it is very likely the stock price will rise before or even after the split. At the critical moment before Amazon's stock split, the company worldwide consumer CEO, Mr. Dave Clark, is resigning after working for 23 years with Amazon. We also noted Dave Clark was in his current role for just 2 years, as his previous role was the head of consumer space. Why is he resigning? He said he would like to start a new journey somewhere. Where will he go? We are not sure. News are definitely affecting the psychology of investor. Stock split, resignation of the management personnel, a mixture of news that can cause investor to overthink. Back to the fundamental. Amazon has been making net profit since 2015 up to 2021. It made its first quarterly net loss in the first quarter of 2022, owing to the low demand of warehouse operation caused by the global pandemic. The net loss is $3.84 billion in the first quarter. This is disappointing, but we all understand that nobody expects the pandemic that caused lockdown in many countries. Of course, Amazon also would not expect so, which is why they have too many warehouses and ended up being strained when the pandemic started 2 years ago. In terms of revenue, Amazon is still making good revenue in the first quarter of 2022 at $116 billion compared to $108 billion in the first quarter 2021, which is actually an improvement. Its revenue composition is kind of well diversified, where 47% of revenue is made from the online store, 22% from third-party seller services, 13% from Amazon Web Services, and the rest are from the subscription, advertising, and physical stores. If Amazon continues to make such revenue and able to lease out some of its warehouses, it should be able to recoup the losses pretty soon. It is also a bit alarming that Amazon is having a negative free cash flow in Q1 2022, which is an outflow of $18.6 billion. It is because Amazon has made some principal repayment of finance leases. The positive side is that Amazon is still making positive operating cash flow. There are few good points about Amazon performance. First is the increased net sales, which is up by 7% year-on-year compared to the first quarter in 2021. Second is the efficiency in managing dilution of shares, for which Amazon has repurchased 0.9 million shares in Q1 2022. Moving forward, the company projected its operating income, sales minus operating expenses, to be either a net loss of $1 billion or a positive net gain of $3 billion compared to the operating income of $3.7 billion in Q1 2022. It is already the month of June. What is looking forward is the Prime Day, which is scheduled to be happening on 18 and 19 July. And this will be the chance to make more sales revenue. Do comment below, would you buy Amazon stock after the stock split and why? Hope you enjoyed the video. Give us a like and subscribe to our channel as we will post content weekly. Thank you and see you again in the next one.